All right, traders, good afternoon. This is Christian from Tribeca Trade Group, and this is your end of day market recap for the last day of November. Wow, and what a day it was. I was going to make a joke about, oh, geez, the markets have been so quiet. I won't make, well, I guess I already did, but that's a bad joke. Yes, I mean, these markets have been very, very fast. We'll talk about kind of how the price action unfolded for the day, but big rally off of Powell. And it's kind of interesting too, because I wasn't really thinking that there would be too much from Powell today. So, when you kind of looking at it, hindsight 2020, I thought that there was enough Fed speakers. There was this one Fed speaker that came in earlier today, which was Cook, which mentioned, all the things that we've heard before about, inflation needs to come down. They need to see it get closer to 2%. So really kind of, hammering home all the points that we've heard so far. So, the bad news in terms of that type of what the market was already pricing in, was just that, we've heard it from Bullard, we've heard it from a bunch of other Fed speakers, that there was a pretty negative tone. So when Powell comes in and says something a little bit more dovish than what the market is expecting, this was the move. This was a huge move up. The Qs rallied 4.5% today. So by the way, risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. So I will go over a couple things that I found really interesting today, because there's a lot to go over, and I could probably speak for an easy half hour about today's market action, and I don't want to do that. But what I thought was kind of interesting today, a lot of head fakes in the morning. For instance, if you look at what the dollar was doing not pre-market, but basically up until about 11 o'clock, it just started to kind of ramp up. And that's usually not a good sign when you see the dollar rallying like that. Even though it wasn't that ginormous of a move, it was down on the day and moved up about 30 basis points, right? And then you can obviously see what ensued once Powell started to speak, or once the announcement came out, or the headlines about his prepared speech, and you saw a really decent move to the downside. Again, I'm starting with things like the dollar and interest rates, because you want to see things that are kind of confirming that we saw in equities. And the dollar down today, afternoon reaction to Powell's speech, right? And then of course we could look at bonds. They actually, were kind of going sideways. Again, the last couple of days today, the last couple of days did not really paint such a rosy picture, because every rally that we were seeing in the bonds, which mainly started in the every day in pre-market, bonds would be up 20-30 basis points, and then they would give it back. The one thing that I will say that was positive is while the price action just didn't look great the last couple of days, not able to kind of hold the gains, we didn't break support. And I think, really, if we go back to the which we're going to go to the S&P chart, we got very close to breaking, and I'm going to review that in just a second. Here's what I'll kind of start with this, because I always like to see what Fed fund futures have priced in after there's a speech or there's an economic report. There really isn't much change for the market reaction today. There really wasn't that big of a change, because if you look, this is, this was before, this is what it looked like before, right? It was 54 basis points, right? This is what it looks like post the Powell's speech, right? So it did move down, a couple basis points. Really, where the bigger changes were, it looks like going out to February into March, about 10, almost 10 basis points of a difference. But we're not talking about like 25 basis points or 50 basis points changing in the pricing. We're talking about a couple basis points for December. Only two basis points change in regards to what Fed fund futures are pricing for the next Fed meeting on 12/14. Okay, so not that big of a move in terms of that, but perhaps it's the feeling that that the rate, which was looking at, we were going to top out around 5%, that's off here about 10 basis points, maybe a little bit more when you get a little bit further out here. So perhaps it's just the feeling that that interest rate hikes are going to come to an end. I'll chalk that up as kind of the positive, because again, we didn't really see that much of a step back in the interest rate expectations. Okay, so again, I'm just trying to give you some perspective. So look at what we did today. We got over the 200-day moving average. Remember what I said just a day, 2 days ago. I said, we're going to see everybody talking about the S&P getting rejected at the 200-day moving average, very similar to what we heard when the Dow Jones got to the 200-day moving average and it got rejected for the 1 day, right? So I said, stay open to all possibilities, right? Here's what the Dow did, and the S&P, same thing. Just because it gets to the 200-day moving average and doesn't get through it on the first attempt doesn't mean that that's it, game over, we're going back to the lows. You have to stay objective and realize, okay, well, what's the support level? There was a few negatives that I thought, on the daily chart today. Again, I'll show you what I wrote this morning so that I'm not making this up, because like I said, I was not super positive coming into today, but I said, of course, not much different than yesterday, below the 200-day moving average, below the short-term 5-day moving average. And I said, note the 20-day moving average has caught up, right? So that was one thing that I thought was positive, that sometimes these moving averages just need to kind of catch up a little bit to the price action. And I thought really like this was the level, to watch in terms of, because the value areas are so far below here on the daily chart. But from where we were on the daily chart, I thought the 20-day moving average was really something to watch, right? Also, one of the things that I mentioned, just crazy move, was that, I didn't like this today. And I actually sent out a video. I said, hey, we're really kind of teetering on possibly, breaking to the downside. So I was getting concerned going into the Powell speech. And, I did a couple trades today, but I did them in kind of conservative areas of the market this morning, right? If I talk about this a lot with these events that we have, right? I tend to think that sometimes the market will give you some opportunities in some things. And, I went into a couple conservative things this morning. I went into, for instance, I went into a Pepsi today, right? I talked about how these beverage names were weak yesterday, which I didn't really find a reason for that. But I just like the fact that Pepsi, which has been a strong name for a while now, had 3 or 4 red candles. And I just thought that this was a lower risk entry as price was into the 20-day moving average. It actually went down a little bit lower from my entry this morning, right? And it took out this virgin point of control, right? It went a little bit lower here, but found a footing and a really nice move. And that's basically almost back out to new highs. So Pepsi was one, Nucor was another one. Again, not really real sexy names here, but I thought Nucor, with the story about China reopening was kind of an indirect play, along with things like FCX and so Freeport, Alcoa, reopening trades for the possible reopening of China. Obviously, the direct thing is China equities, right? But there's a lot of things that are indirect, like some of the material plays. But same thing here. We had just small, little smaller volume here on the pullback. 1, 2, 3, 4 little red candles. And I thought that this was a good opportunity, right? And those were a couple of trades that I went in this morning. Now, again, the thing with these events that we have, because we've seen a lot of big price action on events like Fed days, or even today, which was not a Fed day, which was just a Fed speech by Powell. But we've also seen these big moves on CPI reports. So you kind of have to get to the level of risk that you're comfortable with. Take a look at some of the trades that I did here early, right? I did reduce risk. Like, I didn't like the fact of owning something like this that was starting to get below my cost basis. So it's a lot of risk management that goes into days like this, right? Taking a small, even a super small target in Lulu, right? Just improving my cost basis, getting myself comfortable with, hey, we've got a big, event at 1:30. Let me at least take a little bit of a small target, take off a trade that's not working. I put on this trade yesterday, right? So again, just kind of getting myself squared away with, hey, let me get out of anything that looks like it could be a problem, right? And, salvaging some things that, that I didn't want to see turn into a big loss, right? We talk about all the time, 4 different types of trades that you can have. You could either have a small winner, a big winner, a small loser, or a big loser. That's it, right? If you want to add a scratch in there too, as maybe the 5th type of trade. But, this year has been all about trying to avoid that 4th thing, right? Having big losers. I've had a lot of small losers this year, right? And this has been a year where if you're not comfortable taking small losers, right, you're going to have a real damage in your P&L, because a lot of people just, who are newer to trading, just don't want to sell. Some of them don't want to sell until they get back to their cost basis, right? That's been a recipe for disaster this year. But I'm comfortable. You'll see me sometimes, and it's painful to take off 2 or 3 trades, for small losses, right? Because you did the work, you saw it was a setup, right? And sometimes it gets mentally defeating and frustrating to have to do that. But you know what? It keeps you in the game, and it keeps you ready to go for when we've got a day like this. All right, so very, very strong. A couple things. Lulu was a really nice trade. This was actually brought up by a member in the Tribeca Trade Group room. So I think it was yesterday morning. They said, "Hey, how about Lulu?" And I said, "I've been watching this name. I think we put it on the TTG. We put this on the TTG weekend watch list." And it looked decent. So I took the trade, and it worked nicely. Yeah, looking at the weekend watch list, it was actually not on the list for this weekend, but I think we did talk about it. So that was a really nice trade. My target was, and this went way past, it looks like, my target. I think my ultimate target was what, 372. Wait for this to back and fill here a second. 374. 374 was my last target. Where did I get that from? Oh, there it is, the VPOC up there. So it actually went past it to 380, right? But again, planning out your trade. So Lulu, where's my last target here in Lulu? There it is, 374. Again, this was just a trade that I entered into yesterday. FICO went past what I was looking for as well, right? FICO was a pretty good setup, right? This was another strong earnings name. This thing blew right past my target, which was 607. I took that thing off here, and but again, as long as it's, I got into this at 586. So that's a nice looking trade. All right, so I could go through some more trades. I thought FCX, that's another trade that I took. It was kind of hanging out right at the top of value. Again, kind of a play on hearing about the possibility of a copper shortage with China, but really, really strong today. And let's just look at the daily chart and notice how it hopped over this consolidation. I was also watching AA today, and I think that has a virgin point of control up there, right? 51.52. And again, if you don't know the value areas and the market webs, the indicator that I use, the virgin point of control, what I would suggest you do is sign up to be a Tribeca Trade Group member. We're doing a webinar, right, specifically for the market webs and how to use them in your trading, right? What they mean. We're going to talk about the We're going to talk about the December value areas, right? We're going to do all that tomorrow at 5 o'clock for members. So if you're not a member, make sure that you go to tribecatradegroup.com, right? And you go to, and I think we still have a special. I don't think we changed it in our system. So you could still get half off the first month. This was our Black Friday sale, but you go right to tribecatradegroup.com and go to services, and you can sign up there, right? If it reverted back to the regular price, just email me and I'm happy to honor the discount for you. All right. But that'll, so again, VPOC up here at 51.52. Let me get to a couple other things because I'm a little bit scatterbrained after today's price action. Finally, really interesting to me is China, made this big move. You may feel like, oh, geez, after, this was the best performing area of the market once again today. I think it was anyway. Let me see. Where is KWeb on here? Yeah, here it is, up 7.8% for the day. If you think that you missed the rally, right, after seeing a couple of days of a big move, just realize this is just getting to the 200-day moving average, right? It's the first time that it's gotten back to the 200-day moving average since all the way back here. All right. So now, a lot of questions that I received today, kind of towards the end of the day, was, hey, what do I do here? Do I chase? Well, you could see how many targets I took today and how I managed today. Newer trades that I put on. Yeah, I'm all about taking targets. And even though they're not huge targets, that's basically how this year has been, is to make sure that you are taking some exits, and then you can hold out for that bigger winner on the last portion of the trade. That's how I've been kind of handling things. But as long as you've got a signal to trade against, so how I would handle something like this, the Chinese internet ETF 2841, the 200-day moving average is at 27.82, right? You could go long this, basically, and give yourself some tolerance, maybe with a stop around 27, right? And if this is a real move, it should be able to get above its 200-day moving average, right? Which is the line in the end in terms of whether something is in a downtrend or in an uptrend. So very nice. Of course, we talked about in yesterday's video, a couple names. PDD continued to move higher, up another 4.6%. I actually tried a little bit of Futu today, but I didn't want that exposure, which ended up 5% for the day. I like this one a lot out of the group. Right, VPOC up here to aim for at 67, but I just didn't want that exposure into Powell's speech. So again, it's a lot of what we're doing in trading is managing risk, managing where where you don't want exposure versus where you're okay with exposure. I was happy to have exposure in Pepsi and in Nucor and in FCX, not in a high volatility name like Futu, right? But it's again, it's based on the user. So KWeb, very interesting over the 200-day moving average. If you want to stick to the US, right, this XBI biotech, remember, there's a bunch of different ETFs that cover healthcare, right? Healthcare and biotech. XLV, the strongest of that whole healthcare biotech group, took out a VPOC today. So you might see a little bit of profit taking now that we've taken out this upside level where a lot of buyers and sellers have previously met up. So that's a VPOC up there. All right, IBB, which is biotech but market cap, and then XBI, which is equally weighted, right? So smaller names get the same weight as the larger names. Just got back above the 200-day moving average, and I like this. I think that this is more has a better opportunity risk to reward here. And again, what you do with this is, right, instead of worrying, oh, geez, am I chasing here? You're not really chasing here. This is the first signal back above the 200-day moving average. So set your stop just below here, and then let's see if this thing could actually get going and maybe get up to this $88 VPOC. All right. A couple other things that I was going to mention too, names, this was kind of nice. Like, if you look to see, just to kind of follow through, how I kind of worked today, one of the first trades that I took today was, I took this starter here, two starters, Shills, right, which is which I think they had some news after hours about the CEO leaving. So I'm a little bit worried that the name's down. I didn't see. It's doing okay, but here was my entry, right? After a name has come in to a, taken out one of these virgin point of controls to the downside, I thought that this was another low risk entry, because again, I know where to get out of it. Same thing with SMCI today, right? Which is one of my favorite names, right? This name had just 2 days. I looked at this thing yesterday. I didn't think it was ready, but it took out a VPOC, right? And my entry was kind of right in here today. Right, so I got a couple dollars on that trade, 87.50, and it's trading up at $90. Right, again, so having that watch list of names that I really want to get into, right? And SMCI, by the way, is one of these names that has had great earnings, and that's not an expensive name. And, that's not going to change in terms of, as we went over in the beginning of this video, right? Interest rates are going to stay high for a while. So, while there's going to be short squeezes from time to time in areas of high growth, I still don't think that I still think in that group, you want to be really selective. I think, computer hardware storage, a name that's a PE of 10, that has continued to have strong earnings is exactly, where I'm looking to kind of buy the dip in this group. All right, just a couple other names. And, here's one that is high growth that I think is pretty interesting. Right, here's Shopify. So what's interesting about this? And again, if you feel like you've missed anything, the name still hasn't gotten it. For me, it hasn't even triggered yet. But look at the nice base that you've got in Shopify. Right, it did go, it did take make a new low on 1013, but hey, this thing could get over the 200-day moving average. So here's a growth name up 10% today, but really since May, it's gone nowhere. So you've missed nothing, right? Because the name hasn't done anything. So I don't have a position in this one, but if it gets above the 200-day moving average, sure, I'll give it a try. Because again, I know exactly where the trade's not going to work, meaning if it goes back below the 200-day moving average. All right, guys, I could talk a lot more about other names, but I think that's good enough for now. We'll have a lot of chart studying to do after today. So guys, have a great night, and I'll see you tomorrow.